All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Markets opened on up and, started to drift a little bit higher. Not like the first half hour means a heck of a whole lot. But then we see this push on down. It was started with the Consumer Sentiment Index, which slightly missed. Which, in this market is going to be reacted to aggressively, and that's what we see. And you can see the market has pretty much now pulled back about another 30 points off of its highs and kind of still going, right? But something has happened here, and we haven't seen this happen in the last, pretty much all week. We have almost a 30,000 volume candle. Almost a 30,000 volume candle. That's massive. What's it mean? What's it say? Well, generally, if it's outside the first hour of the day, it's almost every time, look, bottom is in for the day in terms of we're not going to close below this level. We may still see the market go down. You may still see the market sell off aggressively, but it's probably not closing below 26.45. I know this is in the first 35 minutes, but I think we can make that same assumption. And I think that's a pretty safe assumption here on the day. And that's a mark that we just haven't had here for a while. We haven't seen the market have that characteristic here for a while. So if you're looking and saying, you know what, I want to step in and be a dip buyer, forget the Amazons of the world, forget some of those of the world, that still are going to have their own, march to the beat of their own drum. But the stuff that's a lot more market weighted, some of the ETFs with some decent value, if you want to kind of day trade those, now kind of sets up a decent, decent little setup here. But for me, I'm going to wait. I'm sorely tempted to go buy some Bank of America personally, but I'm going to wait and see if it does stretch to another low. If it stretches to another low, I'll step in and buy a little bit of Bank of America, hoping that at least or expecting that I'll at least get a rebound back to, this level that, the market sits at right here, right now. So we have that kind of going on here, or not kind of, but we have that going on here this morning, and we just haven't seen that for a while. But as we expected on the open, the market is bathed in red here this morning. It's absolutely getting taken out, and it's not with any sort of differentiation. It's not stock specific. It is pretty much everything and anything. It's going down. There are 17 advancers today to 488 decliners on the S&P 505, right? If you look at the advancers, CME, that's been a pretty good one, but CINF is that one most people are trading. AON, nope. Expedia, Intel had earnings, International IP, Newmont Mining, a gold stock, RMD, ROP, Roper here, but most stocks are substantially in the red with the indexes. There's just no differentiation, and that's what we have seen. And what, when we see the market sell off, we see a total lack of differentiation here. And when we've seen it bought up, we have seen a little bit of differentiation come on in to the equation. All right. So anyway, that's happening right here, right now. Wanted to hop on and show that massive volume here this morning. Let's see here. All right. Hopefully we're back in sync and not buffering here. All right, but bottom line, we have seen volume here this morning that says, hey, you know what? Chances of closing below the lows that were just set, very slim. Very slim for the market itself. That doesn't mean that Amazon doesn't close lower. That doesn't mean, some of these individual names, don't close lower. But the market itself, chances of closing, lower than where it is right now, pretty slim. Pretty slim here overall. As I mentioned, we had the consumer confidence data. Let me show that to you here. You may be saying consumer confidence data, the market never pays attention to that. Well, you're right. It hasn't been paying attention to the consumer sentiment data. It just really hasn't at all, right? But when the market gets fear in it and the market conditions go like this, it will use any little thing to gotta sell again. Sell, right? And you can see what the consumer sentiment looks like. This is a number that oscillates a little bit and everything else, but this is still an incredibly strong number. And, there's no real signs of weakness in it. Yep, it missed consensus by 0.4. It's a survey. All right. That's not exactly that's not exactly anything game-changing here for it, and something that, being reacted to. But, you can't go and say, hey, well, because consumer sentiment, blah, blah, blah. It's just one of those things where when the market gets in this mode, it'll react like this a little more often. Now, for the challenge, I have Adobe. I watched it open up here this morning. It, had a little strength here with the market, but then the market pulled back. What was that? 26.72 down to 26.38. So market pulled back, 34 points. So Adobe dropped, about $4 from its high, sitting here down about $8 here this morning, down about 3%, kind of just trading in line with the Qs. And that's pretty much what it's doing here this morning. I am not going to exit it right here. I'm not going to make too much out of the price action here. I would like to see it hold on to yesterday's lows, but even at the same time, I'm not going to go anywhere if it doesn't, because if it doesn't and does come down to the 200-day moving average, that's where I'm going to look to buy some more. I do not believe that this is the last time we're going to see Adobe in the 245 to 250 range. I just don't think that is very realistic. I don't think that is the case, and so not looking to go anywhere on that. At least right here this morning. Something may change a little bit later today, but I don't expect that will be the case. Obviously, I'm not getting any upside, signals on Katie here, this morning, or even anything close. It's just one of those where everything's getting lambasted to the same degree here this morning. But we'll see how some of the risk-reward setups, go a little bit later on here today. I think this may be a market that, that being short into the weekend, is oftentimes a strategy that investors will employ, and it's one of the reasons why, sometimes gap up on Monday, they tend to get a little bit bought because, there was a little bit of short positioning going into the weekend. I'm not so sure investors are going to want to be on the short side going into this weekend, or those momentum traders are going to really want to be on the short side going into this weekend, and may set up for a nice little afternoon bounce here. But regardless, the market conditions are still the same. We're still going to have a lot of this chop and a lot of this volatility, and still going to be wet wild out there. Will it end at some point? Sure, it will. And what we'll see is the average true range start to go down. But one of the things that we will see, two of the things that we will see before the market goes bullish, and kind of, and I guess I show this because of those of you out there who are eager to jump in. Oh man, I don't want to miss the bottom. I want to be in. I don't want to miss the next uptick, right? That feeling, right? But here's the average true range. What do we know? When the average true range is on the rise, what happens? Market tends to fall. When the average true range starts to decline, what tends to happen? Market tends to rise. And yeah, it has ups and downs and all arounds, but this is just one of those things where, look, you're not missing, from an investment side, you're not missing a whole lot. by staying away when the average true range is rising. Yeah, if you want to step in here or there, you have something cheap here and there, sure, go for it, right? Go for it. There's nothing, there's nothing too negative about that, but getting overexposed, no, right? Options, buying options for investments, that kind of thing, nah. But it's one of those where as long as that average true range is rising, the conditions are the same, no matter whether we see a 50-point rally or 50-point decline. The other thing is the bullish percent index. Look, the bullish percent index nailed this decline, right? It absolutely nailed this decline. And even yesterday, with the big rally, the 50-point rally, the bullish percent index didn't go up. And we talked about this yesterday. It didn't go up. When the bullish percent index moves 6% higher, you're not going to catch the low on the market. But buying at that point, you're going to catch a lot of uptick. And so, having some cash waiting for the average true range to start to decline or the bullish percent index to have that 6% uptick, both of those are going to be very good indicators. And do you have to be a little bit patient? Sure. You have to be a little bit patient, and you may not get the the exact thing that you want, but those two things are going to happen. They always happen before the next kind of real major uptick. And so just, keep in mind, market conditions are still the same. They just have not changed. And, if the market reverses today and goes on higher and actually ends in the green, it won't mean the conditions have changed, right? Conditions will likely still be the same. And what does that mean? That means if you're going to short this market, there's 120 points of risk to the upside. If you're going to get long this market, there's about 80 points of risk to the downside, before you get into, that next oversold type of condition. All right. Alrighty. A little bit later, give me about 40 minutes. I'll jump on. We'll go take a look at, how to identify the stocks that are going to move the most, going forward here after this correction. So kind of some post-correction analysis. Now we're still right in the middle of the correction, so we're kind of little early on it, but I do want to show it to you, and so you kind of, for those of you who are kind of anxious as, what next, or man, I got to jump in here, or what if I miss out? You can see, hey, you know what? There's a pretty easy way to assure yourself that you're not going to miss out, and of being able to identify, when the risk reward comes into play. And we'll show that to you. And then also have some stuff prepared on the housing market. I wanted to give it yesterday. I will give it today, most likely, but we'll see what the market does. If my time, gets taken a little bit here with the market, I may have to postpone that till Monday here, overall. Okay. All right, but I'll be back here in about 40 minutes, and we'll talk to you then. Take care.